Hello, welcome from Trend Signal for our review of the data and events the week beginning the 6th of June. End of last week, pretty dramatic. Non-farm payroll data was so far away from consensus, it was almost unbelievable. 38,000 compared to 160,000, which is just so wide of the mark that it paints a fairly depressing picture. Not only that, they being the Bureau of Labour Statistics, they revised down the previous 2 months as well. So obviously the markets, certainly the dollar, got absolutely smashed, as you'd expect, and precious metals, specifically gold, really rallied quite sharply. Equities were a mixed bag. US equities slipped, but then made a little bit of a recovery in the late session on Friday, but picking through the tea leaves, it looks like the chance of a rate hike now in June is completely off the radar. Here's the CME's own Fed Watch, which gives the possibility of a rate hike. In June, it's 3% or 3.8%, so it's almost negligible. For July, it's only 30%. So compare that pre-non-farm payroll. We were talking about a 30% chance in June with a greater than 50% chance in July. So it looks as if all bets are off, according to this, until December, hence the big move in the US dollar. So let's have a look at what we've got to look forward to this week. Post non-farm payroll week tends to be fairly light, so there's not a lot really to get hold of here. And in fact, the week's probably bookended by the two most important events in a way. We start on Monday with Janet Yellen, the chairperson of the Federal Reserve, talking in Philadelphia at 5:30 in the evening. Now, it certainly it will be very interesting to see what she's got to say post non-farm payroll, because 2 weeks ago she said it would be probably be appropriate to lift rates this summer. Now the market does not think that's the case anymore, so we'll have to wait and see what she's got to say. But the numbers that I've just shown you from the CME suggest the markets don't believe anything's going to happen now till December. 5:30 this afternoon. I say this afternoon. It's on Monday. I should say at 5:30. We have a couple of central banks, Australia and New Zealand central banks. Nothing expected from the Australian central bank, I should say. But the Reserve Bank of New Zealand on Wednesday is expected to shave its rate from 2.25% to 2%. The market has largely discounted that. Before we get that, we got manufacturing production here in the UK at 9:30 on Wednesday. Obviously, everything is completely dominated by the Brexit debate. As we speak on Monday morning, odds of a Remain result has narrowed quite sharply. We were 1-7 on 2 weeks ago, as narrow as 3-1 on, and it's gone even tighter now, 4-11 on now for the likes of Ladbrokes. These odds tightening all the time, and that's reflected in the volatility in sterling coming off quite sharply against both the US dollar and the euro. Okay, let's get back to the calendar. We do have Draghi speaking early doors on Thursday. The event there is the Brussels Economic Forum. Really, he's been particularly quiet of late. I suspect they regard the oil price picking up as quite helpful, certainly to inflationary expectations anyway. So probably the less said the better, I suspect, from Draghi. And we end the week with the prelim University of Michigan Consumer Sentiment number, which has had a revision down from the previous month, and we're looking for a slightly weaker number still particularly strong generally, and I would have thought if there's going to be no rate hike, the US consumer will remain particularly happy. That's it. Thank you very much for listening in what is a fairly light calendar this week. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.